Hello guys, good afternoon. Today I'm going to do some analysis over the E-mini S&P 500 futures chart, and today we have March 9th 2023. So it is a 15 minutes chart, and I want to see because in the initial bullish movement I didn't trade, but I got some trades during the bearish move. So how we can analyze the chart for the daily trading uh, over the 15 minutes, 5 minutes the time frame. So what you can do, you can see some liquidity area from where the price rejected. So we can see there are some wicks. This is the bullish candle, green candle, but the buyers didn't hold the position and the sellers got themselves in, and the price move towards the downside, bearish move. So what you can do, you can just um, mark this liquidity area and see if you will find some rejection from here, and I can mark it with the red color for the sell. And another thing what you can do to mark some uh, liquidity sweep in the shorter time frame. So what you can do, you can come in the 5 minutes time frame and do some analysis, because the price was coming down. If you see here, the price was coming down, it came down up to this area and then shoot it up. So what you can do, you can mark some Fibonacci levels, because this was the swing low, then it made the swing high, and then low, and then high. So the price, this was the impulsive move, this was the retracement, like I can mark here. You saw the impulsive move, then there is a retracement, and then there was another extension. So what you can do, you can, because once you open your system in the morning, you see that okay, where you are looking for the sell or for the buy. But what you can do, you can mark the swing low on the Fibonacci level and the swing line. So my extension should be around 150 to 161%, and from there I need some rejections. So if I miss the morning trade, so what I will do, I will hold my position, I will not do any trading until I will not find any rejection. So you can see that the price, there was impulsive move, the price retraced back to around 61.8%, and from 68 to 61.8 to 78.6%, you need to have some support. So you can see here that there is a point of interest in this area, because in this bearish move the lower candle is not the red one. Okay, because if you see the bottom of this candle, this red candle, you will find at 3979. You can see here 3979 is the bottom of this red candle, but the bottom of this green candle is 3978.75. So one tick less than this red candle. What you can do, you can mark this as an order block, and you need to wait for the price to come in this area again. So before the market open at 8:15 candle, you can see the price came back in this area. And why it came back? Because it already swept out the previous lower high. uh, so if you see that this was the previous lower high, and it created the change of character, and then the price came back to retested this order block and shoot it up to side. So you can trade over this area in this way. What you can do, because you know that okay, my extension is 150 to 161.8%, so you can put your trade here for the long. Suppose if you are in a trade here, you can put your stop loss below the previous order block, means previous low, and you can trade up to 150% at least. So this can be your target, and you can get out most 1:7 risk to reward ratio trade. So but in this case, because I missed the trade. So I was looking for the sell from 161.8%, and the price did the same. So what happened, because I need some rejection from 88.6%, or in another way 11.4%. So this was my low and this was my high. Okay, so I need some rejection from 88.6% or 11.4%. Okay, because now the price is coming down, means because I will go in sell, so I can reverse it. So 11.4% and further to the positive direction in the sell trade. So what I will do, because I already marked the liquidity area, so I know that this is my selling zone. What I can do, I can come in the lower time frame, like 5 minutes time frame, and I want to see some CHoCH, change of character, in the market. So the market, what market did, it was creating higher high and then high low, then higher high, then high low, then higher high. But after this, it made high low, but it didn't create higher high. Instead of higher high, it made lower high. So after that, the market came down. So what I want to see, I need some, because the market didn't make the higher high. So now I am very careful that okay, I can find my trade. So where can I find my trade? I need to mark the previous low. This candle low is the previous low, and I can mark here as the change of character. So this is my CHoCH area, and after the CHoCH, because this is the first CHoCH and the market shoot it upside, because it is going to retest the previous order block, the last order block, extreme order block, or any gap. So on this time frame, I found some gap here, because if you see, this is a gap, like this is the bottom, this is the first candle, this is the second candle, and this is the third candle. So bottom of the first candle and the top of the third candle is your gap. So this is your small gap. If the price will not reverse from the gap, then the price needs to reverse from the order block. So 5 minutes order block last candle is this one. So this is my order block. I can also mark in the red color. So I will be looking any bearish candle in this area, in this zone, and my stop loss will be above this order block, or for the safer side, it can be above from the previous higher high, but it is 5 minutes time frame candle. So what you can do to squeeze out your stop loss, you can come in the 1 minute time frame and mark the order block in this. So this was the CHoCH. Okay, now after the CHoCH, if you were looking in 5 minutes, after the CHoCH, the price was going up. So you are looking any order block here in this region. Okay, right. So in this area, you are looking for any. So if you see that, okay, I can go in the. So now you are looking any CHoCH in this area. Okay, so I came in 1 minute time frame, and I can mark that okay, if there is any gap here, yes, I found the gap here in 1 minute time frame. This is your gap, and beside the gap, where is my order block? This green candle is my order block. Okay, so I will be looking sell within this range. So before that, your selling zone was from 4017.75 to 4009.75. So almost 8 points, means within 8 points you can go in the sell region. Now your selling zone is 4018 to 4013. Okay, almost 5 points. So what I will be looking, I will be looking any rejection from here. Beside this, what you can do, you can also switch on the RSI if it is possible, because the price is now is going up, or in 5 minutes you have already marked your selling zone, and I can play around. So this is your sell area, right? Like if I will sell from here, short position a little below the selling zone, my stop loss will be above it, and my target will be in the higher time frame, this order block at least. So, or 88.6%, that's my favorite area. So you will get 31 points, and your risk to reward is 1:5 ratio. So now I am looking for the selling candle or any sell reaction. If I will play again, the price went up. You can see in the 1 minute how you got the rejection. So the price went inside the zone, in our selling zone, just hit the last order block. This is the last order block, just kiss this area. So you can see how much, how you have a very, means only 6 points stop loss. Okay, very small stop loss. And after that, what the price did, so if you want to trade in steps, so what you can do, you can take out first profit at the previous lower low. So this is your, this can be your target number one. Next target can be your, this, there is another order block here. This can be your target number two. Okay, 61.8. and and you can see there's a huge gap here. Okay, so what you can do here, you can mark your target 3 within this area. In every trade you are getting profits. Okay, and you can trail your stop loss. So what the price did, if I will play again, price hit your first target, and in this trade you can get from 4015 to 4015 points. 15 points in E-mini S&P 500 is $750. So what you can do, you can trail your stop loss. If you have already reached 50%, you can uh, put your stop loss on the break even or above 23.6%. So we can see what the price did after this. The price consolidated in this area, and after that the price is going up again, but we have already trail our stop loss above 23.6%. Price is coming down, and here the price here hit your target number 2. So if you have 3 or 4 contracts, in the first contract you got 15 points, in the second contract, because your selling area was from the same level, so if you see that 4015 to 3995, almost 20 points in this trade, and 90 almost, so 90 and 15, 25 points in this range. So 15 points, 20 points, and 25 points overall. you can get 50-60 points in this trade. But my ultimate target, where is my ultimate target? So for ultimate target, what you can do, I have already marked this last order block, okay, and the price already hit 78.6. So my favorite area is 88.6, which is 3983.5. So if I will play again, so the price is trying to retrace from this gap. I can mark this gap in the blue color, so because this was the gap. The price already is inside, came inside the gap, and from here what the price is trying to do, we can play again. So my ultimate target, where is my ultimate target? I don't know, either it will reach or not, because the market is still going on. So my ultimate target is this area, okay, and after that the price can go, because it can extend up to 111.4%, which is 3974, okay. But I think the price, the market is still going on. Right now it is 32 minutes past 1. So one more thing, guys. If the price has already hit 78.6%, you need to go, means you need to put your stop loss uh, two levels up. Means like the price was hitting 50%, I told you that you need to put your stop loss above 23.6% or at the break even. Okay, but for the safe side, because you want to earn more, so 23.6% was good. So now if the price has already hit 678.6%, you need to put your stop loss above 50%. So you can see the price still didn't hit your stop loss, and you are in a trade with the fourth target. Your fourth target hit here, and we can see what, and also your ultimate target, because I have already marked this. Okay, I can remove this, because we marked this zone, this order block, um, previously on 15 minutes, I think. So the price exactly hit over this zone, and now we can see, if we have some time, so the where the price is going after hitting the price. Still we are getting some bearish wicks. Okay, so the price hit our, yes, if you can see, the price hit 111.4%. Okay, why the price hit 111.4%? Okay, what I can do, uh, okay, in this way you can trail your stop losses, you can achieve your targets, and the initial move, you need to look for the rejection from this area, like you need to wait for the swiping out the previous higher high or any liquidity area. So just mark the liquidity area before any trade, and after that you can wait for the sweep out of the pricing. The price has already swept out, this was the high candle. One more thing, I'm just clearing everything. One more thing, the highest candle, the green candle, was this. Okay, so you can see that price didn't break this area, this high. Okay, none of the candle is closed above this area, above this line. So this is also one really good thing, and means really beneficial thing, which you can see and you can mark in your trade, that the price should not close above this. If the price will close above it, then you need to get out from the trade. You will not get any profit in that trade, so don't linger on your losses. Okay, some of the traders say that, okay, you can do the, means you can, if the price will go up, you can buy more and more, because you are going against the trade. Okay, if you are in loss, please don't average it down. If you are doing averaging, you can be a big bag holder. Anyway, so if we will see in the 15 minutes chart, the price went up here and the price is coming down somewhere, which region? Okay, okay, so I I saw this gap before. So if I will mark in 15 minutes, okay, 5 minutes here. Okay, you have a gap here. So, and another gap here. So I want to see, okay, if I am getting any Fibonacci level here, like 150% or 161.8%. So if you see the high on the higher time frame, why the price is rejecting from here? If it is rejecting from any of my favorite rejection area, 38.2%, it should not go above, it should not close above 61.8%. So obviously we can see that it is not even 50%. Might be it is a rejection from 38.2%. So we can see this was your high and this was your low, and the price rejected almost from the 38.2%. So what can be my next target? It can be my 111.4%. So at least price needs to extend almost 39.58 area, which is almost it is doing. Another thing, the price was rejecting because if you see on the lower time frame, I told you that the price should not go above 50%. So this was your low here, this was your high, and the price should not go above. Suppose if the price is coming down, you see here the price has already come here. This was your low. So the price should not close above 61.8%. This closing of the candle should not be like this. Should not be like this. The price should not close above 50 or 61.8%. If this will happen, then there are more chances the price will come again within this 78.6 or 88.6 area, or like here 23.6 or almost 11.4%, and you can mark your order block, and from that order block the price will go up again up to 78.6 or 88.6%. But in this case right now we are not having this case, so the price didn't close above this, and now it is heading towards extension, and we can mark our extension like 188, which was almost 39.58, which we already marked. So the price needs to come almost in this area. So this because we cannot take every trade, but for the safe side, initially you saw that what can be your stop loss and profit targets, how you can trail your stop losses, how you can get inside the trade. I told you already that okay, you need to see for the rejection almost 11.4% or whatever. You need to watch for the chalk, the price needs to chalk, and then it needs to go up to test the last order block. You can mark your order block in 5 minutes, or it's better to mark in 1 minute. And from that order block, if I will mark in 1 minute, I already told you can again check the video, but it can be miss. It's not every time it will not go up to the extreme order block. Might be it will come up to this gap, and the price just kiss this gap. It can happen that the price, like, it came down, then it went up like this, and it just kiss this zone gap and then move towards the downside. It can happen. So not every time you will see that okay, the price is going inside the extreme order block and then retracing means back. So just manage your trades in a proper manner, so you will find these type of trades every day. So and guys, another scenario which we can see, like in this bearish movement, uh, we can mark this low, and we need to see the extension. So first target can be 39.53, or before that, if you want to go with the safer side, you can go get out 39.58, 39.58.53. And if the market will go more bearish, then might be we will see 39.42 or 39.12.25 area. So these are the possible scenarios, these are the possible targets in these type of trades where we are super bearish, or vice versa if we are in super bullish trades. So like if I will show you what happened yesterday. Yesterday was March 8. Okay, so you can see there is a gap here. So I will be looking something in this zone, or I can mark this high like I marked the blue line, and I will be selling from this area. Okay, but this area has this higher high, lower high has already been mitigated. So what I will do, I will see the nearest lower high. So this is my nearest lower high, and what I will do, because this was around 6:30, so I will be looking for any rejection here. I can mark 5 minutes level, and from here I need to see if I am getting any rejection or not. So what happened here, the price made the higher high, then it made the higher low, but it didn't make the higher high here. Okay, so what you can do, this was the low, you can mark this low, and you need to wait for the sweeping out, because you have already marked this low, the price came down, it swept out, now the price is going up. So what you will do, okay, so what you will do here, you can come inside the 1 minute time frame. This was your chalk, now the price is going to retest. You can see that, okay, if I'm getting any um, gap, so in 5 minutes you are not getting any gap, so you can lower down time frame up to 1 minute. So in 1 minute also I don't see any gap because the wicks are covering the previous candles. So what I can do, I can mark the order block. So this is my order block, and I will sell here, and after that I will take my position here on 1 minute. So just below it, you can mark your stop loss above it a little bit, for the safer side you can mark above, and then you can come in the higher time frame. For the previous swing was this area, so at least you can go up to this Um, and if you see, this is also 1:3 risk to reward. So the price hit the area. Yesterday was the means the price moved sideways. So at least so in this way you can manage your trades. So you need to wait for the trade to come at your level. Don't run behind the trade. Always wait for the trade to come at your level. Just do 2 3 trades in a day, and I'm really much hopeful that if you just use this trading strategy, you will be your account will be green as compared to the reds, because most of the traders means there are a lot of people, they start trading, but after some time they, because of the loss, they say that okay, this is not for me. So obviously miss everything cannot be, but you need to be patient, you need to be disciplined in your trading. So at least if you suppose if you go with this trade, you can see that you are getting 16 points. 16 points is mini S&P 500 is $800. $800 you will not get with any of the big companies, means they will not give you $800 within how much time. From if you are in the trade at around, suppose here 11:50, and you are getting out 12:30, 30 40 minutes, you are getting this much, but not every time obviously. Every time it will not go 100% in your favor, but the probability is more. So you know that if after losing 4 or 5 trades or 3 trades, you will be break even. So just go with this strategy, do the back testing. And if you like this video, then please thumbs up and follow my channel. Thank you guys. Have a great day for everyone. Bye bye.